Fintech Chatter TV. Presented by Tier 1 People. Leaders in Fintech Executive Search.
Hi everybody, my name is Brian Collins. I'm the Fintech Managing Director at Startup Bootcamp Australia. And over the past 3 years, we've been running a financial health and well-being program that's been investing in some of the best financial health and well-being fintechs from around the world. But we noticed a trend, and we realized that sustainable finance and sustainable fintech is the next major trend in fintech, which is why we've launched the new Sustainable Fintech Fund, a $5 million fund that will be investing into 30 companies over the next 3 years from all around the world, but headquartered here in Melbourne, Australia.
Welcome to Fintech Chatter. I'm your host, Dexter Cousins. And in 2022, I'm showcasing Australia's next wave of Aussie fintech startups. Make sure you show your support for the channel with a like and subscribe. Brian, welcome to the show.
Hello, hello. It's great to be here. It's great to see you.
It is. Yeah, I can't believe this is your debut.
I feel like we've talked a few times, but it's nice to finally be on the show.
Yeah, mate. You took over my mantle as a host of Fintech Australia podcast, and here we are talking to each other.
It was a high mantle. It took a step, jump, and a leap to get up there, but no, you set it up really well.
Oh, shucks, I'm blushing now. Really interested to, when I'd seen the news about the fund, keen to get you on the show. I guess, mainly because what we're seeing in this kind of next wave of Aussie fintechs is exactly the things that you talked about. This kind of mix between sustainability, the environment, climate change, food, agriculture. It feels like, finally, after almost a decade, the mantra of fintech being a force for good seems to be there's a lot of evidence there to support that.
Yeah, couldn't agree with you more. That's obviously the trend that we're seeing and what we're getting really excited about. So I think the short version is, and just to tie all the things that you just said together, we all keep hearing the term sustainability because we don't have a future without sustainability. And yet when we talk about sustainability, we talk about it in terms of the transition to renewable energy, which is super important. We talk about circular economy, super important, bringing down food waste, going plasticless, getting rid of your car, making your next car electric, all these different options. And these are all really powerful things. But what we don't tend to talk about as much is the role that the financial industry has to play in that sustainable future. Australia is a very unique place and a very unique country. Depending upon the report that you look at, Australia is either first or seventh as the richest country per capita in the world. There was an OECD report from 2018 that put us at first. There's been others that have put us in seventh place. It's somewhere in the middle. When you have, and that's driven by two things, the cost of our houses and our superannuation. So in a country where there is so much wealth per capita, the most important decision that somebody can make for a sustainable future is where their money is being banked, managed, and invested. That's hands down the biggest decision you can make. If everybody tomorrow in Australia took a deep look at their superannuation, just one example, and moved their super to a more sustainable fund, that would be one of the biggest changes that we could make. That started to open up a question for us around, well, then what role does finance have to play in sustainability? And should also point out at Startup Bootcamp, energy is the biggest part of our business. We work with a variety of different energy companies on their innovation journey. We run a decarbonized program with Mitsubishi, for example. We do a lot of work with major energy companies globally. And we've been seeing for a while, it wasn't even parallel, that finance and energy were getting totally intermingled.
Yeah.
And then we took a deep look at the UN Sustainable Development Goals. And when you look at those 17 goals that they put out, I can't never remember when it was, end of 2019, I think. 8 of those 17 can be directly or indirectly influenced by the financial system. So if that's the case, then the question becomes, okay, so there's a lot that finance can do, but to go back to your question, is it just a for good, or is this an investable opportunity? Is there something interesting
Yeah.
here? Which is what we really wanted to explore. And that's when you start to find the sustainable finance term. So many of your listeners have probably heard about sustainable finance before, at least it's come up. I was talking to a friend of mine who is an executive at one of the big four banks, and we'll just leave it there. And I asked him how important is sustainable finance in the bank? And he said, it's the most important thing to the bank. He said, we talk about it in every meeting. It's in every memo. He's like, we have no idea what it is, but we know it's super important. And I think, unfortunately, that's how most people think of sustainable finance, to be upfront, is we know it's this really important thing. It tends to be talked about very specifically around funds under management. So are you investing into sustainable investment options? And that's really good. It tends to be talked about in terms of ESG metrics. And that's all great. But when you really dig into those 8 sustainable development goals and you look at some of the reporting, there's a bunch of good reports out there. My personal favorite is the Boston Consulting Group report from 2018, which said that the industry is going to be a $30 trillion with a T industry in the next few years. There's this huge opportunity, and they ranked the current industry of only about $100 billion at the moment. So that's a huge delta vertical.
Yeah.
If you want to make money in fintech, let's remove the social good side of this for a second. If you want to make money in fintech, you have to be on the next delta. And it's blockchain in 2014. It's buy now, pay later in 2017. So then the next question that we had is, okay, so there's this big opportunity. Is this the next delta? And the best way to do that is to take a look at where are founders putting their time. And I know this is something that we were talking about before we came on, and you're seeing this trend already. So every year we go out and we look at between 20 and 30,000 companies to accept the 10 companies who are going to come into our accelerator program. And the last 3 years has been around financial health and well-being. And we realized that was just a smaller part of something bigger. And then we realized that really that's a smaller part of sustainable finance. We can talk more about that later. But we went back and we looked and we started plugging in keywords into the 55,000 companies that we looked at globally. And so we have data that's about 2 to 3 years ahead of like a CB Insights. And I love CB Insights, but it's about 2 to 3 years ahead. And what was very clear is COVID, as we all know, changed everything in the fintech space. Pre-COVID, back office efficiency, kind of enterprise B2B fintech was the thing that was really driving up. As soon as COVID hit, that fell to the ground. Everybody started moving more to kind of direct consumer focus, at least in 2020. And what we saw was that asset and wealth management started going up. When we laid the keywords around the UN Sustainable Development Goals in to check around sustainable finance, it wasn't even close. 800% increase in the last 3 years compared to the next closest, which was asset and wealth management at 234%. Still an incredible increase. But again, if you're looking for what the next delta is to understand where fintech's going to go, all of the signs that we're looking at are saying it's sustainable finance and sustainable finance. So that's kind of where our thinking was up until about the early part of 2020. And we kind of done that research and we'd seen that delta. And so your hunch is absolutely correct, Dexter. That's what we're seeing on a global level, is that fintech founders are seeing this opportunity and they're realizing that there's a place for fintech for a sustainable future, for a good social future, and investors are starting to see there's a lot of opportunity in this space.
Yeah. What's also really, just to kind of add some weight to that, we've had a number of guests on the show probably in the last 6 months who were all very successful founders, some of them kind of OG fintech founders who now their entire focus is on energy and sustainable finance. And they're seeing the opportunity as well. I was also going to share with you as well. I remember when it kind of what you've experienced. I had the epiphany moment, I think at the end of 2019 when I went to Singapore for the Fintech Festival.
Yeah, right.
And what really struck me was it was a bit like the kind of, the Elon Musk, kind of SpaceX mantra of, if we aspire to put people on Mars, there's going to be all this innovation that kind of happens around that to make that happen, which is going to be beneficial for the human race. And the kind of aspiration for Singapore was to make this the kind of largest smart city state in the world. And you could see that, they were bringing together all of these different kind of, areas that you've talked about: healthcare, agriculture, food waste, kind of building, construction, right? And all of that and it was underpinned by finance and by fintech. What do you see that as well as kind of this being like the foundation or the bedrock for which all of this other kind of innovation can happen?
Yeah, there's a concept that Dom Pym over at Up helped me to solidify this. He and I were chatting about this back in the early days, well, the early COVID days of 2020. We were getting on a call and just kind of discussing investment theses and everything else. And I slightly disagree with his, but through a conversation, what I mean by that is he and I were 80% aligned and then slightly different. But the way that I look at it, and especially kind of benefiting from that conversation with him, there's 4 key pillars of things that we absolutely need. We need food, we need energy, we need shelter, and we need our health. If we don't have those 4 things, we have a problem. But what connects all those 4 pillars? It's data and it's finance. And more data and finance are one and the same thing. And that's almost a conversation for another podcast. But more and more, they're really the same thing. And so when that was kind of the initial epiphany point in 2020 that made me realize, again, what we'd been doing with financial health and well-being was just one small, very successful. Our programs did very well. But it was one small part of a much larger thing. And that's when we started looking at sustainable finance. And I think what we've seen, using the Singapore example, is a great example. They've underpinned all of their work around, they've done a great job around most of the UN Sustainable Development Goals. And it's being led by a large majority of it is being kind of conducted. I won't say led, it's being conducted by Monetary Authority of Singapore. It's this recognition that the financial side has to be almost the driver to a lot of the change. And if you just go and to prove this point, if you haven't looked at the UN Sustainable Development Goals in a while, or maybe you haven't looked at them the first time, take a look at them and take a look at just 8 specific ones. Good health and well-being, gender inequality, decent work and economic growth, reduced inequalities, sustainable cities and communities, responsible consumption and production, industry, innovation and infrastructure, and even to some extent, climate action. Some of those, you'll immediately see the connection to the financial industry. Other those, you pull it apart just a little bit, and it's not hard to see how those things get connected. But I think you're right. Singapore's doing a great job of this. MAS is, again, I don't think leading is the right word. Conducting is in like a conductor of a symphony, where they're providing grants here and opportunities there to help really get everybody humming along at the same space. But that's kind of the core of what sustainable finance is it's this open question of how do we make finance a force for good? How do we make finance something that is empowering that sustainable future? And so one of the examples I often use with people is there's some crazy statistic. It's like 90 to 95% of all Australians have the same bank account that their parents set up for them. You might not think about that bank account much, but you might have some savings in that bank account. You might not think about it as an investment account, but most Aussie savings accounts get between 0.9 to 1.2%, somewhere in that range. Where is that money coming from? What is underpinning your savings account? And just asking these small but really important questions can go a long way, because the answer, in unfortunately a lot of cases, it's the safest, longest term investments that the bank can provide. And to be honest, until very recently, like even just till a couple weeks ago, a lot of those investments were things like investments in palm oil, investments in non-sustainable goods. I'm not talking about mining, that tends to fall into a different category, but really long-term investment categories. Now, it's the same thing with your superannuation. You may have looked at your super for the first time when the government said you could take $10,000 from your super if you needed to during COVID. And that was a really interesting wake-up call to the Australian public. It tied, unfortunately or fortunately, right as some of the Rio Tinto news coming out around indigenous sites and mining sites in Western Australia were coming out. And it made people think, well, surely I'm not invested in Rio Tinto. Depending upon the industry fund, you might have been. So starting to ask yourself what your footprint really is, and then digging into that can be a really strong employer. But then the flip side is, do we think those organizations are going to be the ones that are going to drive us to a sustainable future? Not in time, I think, is the answer without help. I mean, we've seen that even just in the fintech stories, when we think of Australia, buy now, pay later, giant Afterpay, one of the largest acquisitions of all time, was rather famously passed over by one of the big four banks because they were like, well, we have credit cards. We don't really need this buy now, pay later thing. And they passed it up. It's not going to be the institutions that make the changes that we need in a quick enough time. So what are the institutions, or the non-institutions? What are the companies? What are the founders? What are the people who are on the ground making these changes? How do we find them, and how do we invest with them? And that's really what we're starting to do. And that's what the fund is about. And we ran a hypothesis on this last year, which was really fun. So we took our money and we invested across 10 companies, and we used the UN Sustainable Development Goals as our investment thesis. I want to be clear, these are all for-profit businesses. These are all fintech startups. They come across, if we were just putting a normal lens on it, they cover across insurtech, regtech, payments, financial health and well-being, all the standard places in the beautiful fintech ecosystem that we have. But what we did is we pulled it back to the UN SDGs and said, do they hit at least one, if not two of these SDGs? And that was our final decision-making process of if we wanted to invest. And that cohort has been the fastest growing valuation cohort we've invested in. It's increased by 100. This is where I say past performance does not indicate future performance. But the last
mate, you're going to get me in trouble with ASIC as being a finfluencer.
No, we're okay. We're okay. See, we're good. Please don't comment at ASIC. We're fine. But it's the cohort's valuation has gone up 140% since December of last year. So we are in May. So in 5 months' time, I've never seen a fintech cohort go up that quickly. And it's because it's just hitting all of the different points of what are investors looking for, what is the market looking for. And so there's these huge opportunities. We can talk a lot more about what those are, but that's kind of to go back to your original question. Singapore is doing an incredible job of pulling it all together. And I think what we're seeing more and more is it's about what is the role that recognizing the role that finance plays in a sustainable future, and recognizing that we can be the industry can be a conductor. But if we want to see rapid change, we're either going to need to go start companies to make those changes, or we're going to need to invest in companies to make those changes, because those fintechs are going to be the ones that really drive the change.
Yeah. Now let's talk about this cohort that you've just been talking about, Brian. So one of the other cool things that's really become apparent as I've started to focus again on this next wave of fintech startups is that I think everybody's got a different approach to actually getting the business off the ground.
Yes.
So it seems like gone are the days where you just come up with an idea, put a pitch deck together, and go begging round town high net worth investors, seed investors, and VC. And we've seen people bootstrap. We've seen people look to get, take the lean startup methodology, get a product out, get it out early, and get it in the hands of customers. We've seen people access funds through crowdfunding. also, selling NFTs.
Yep.
And there's so many different ways now for people to be able to kind of get ideas off the ground. What can you but what we haven't talked about so far is the accelerators. And I wondered if you could kind of share with us, using this kind of cohort as an example, as to the types of people that you've had, who best suits an accelerator, the benefits to it.
Yep.
If somebody's out there listening to this kind of with that kind of urge to get out there and either launch their first startup or get back in the game.
So it is a good time right now. If you're a fintech, if you're any type of a startup founder, but I think especially a fintech founder, it's a good time to really consider an accelerator for a few different reasons. One, a lot of accelerators didn't make it through COVID. It is it's to be frank, I've been in the accelerator space for 7 years now. Last year was my 10th accelerator that I ran. Just from a business model perspective, it's like mixing a fund with it's like mixing a fund with a corporate innovation agency. So
right.
you're constantly kind of battling, depending on how you're structured. Then there was a lot of people who really felt that they were good accelerator groups out there. And I was seeing some really weird deals at the end of 2019 where you as the fintech founder were paying a company money to go through their accelerator program, or they would invest in you, but you needed to pay money back into them to go through their program. Very, very odd things. And those are definitely things I think you need to watch out for. There are 4 big accelerator companies globally. There's Techstars, Y Combinator, 500 Startups, and us, Startup Bootcamp. We've been around since 2009. We've accelerated over 1,000 companies. Our companies have gone on to raise a little over $2 billion. And that's raised. That's not valuation. That's how much money they've actually raised. At the core, and they're great. I want to say there's great Aussie accelerators as well. StartMate is the one that immediately comes to mind. Lauren Kaplan and team have done a really great job, and there's some excellent mentors there. What you want to do is there's a couple things. One, know what the remit of the accelerator is. It is just like a fund. They work with different kind of stages of companies. So at Startup Bootcamp, we're a little bit different. We, at least especially on the fintech side, we work with later stage companies than most people I think of when they think of accelerators.
Yeah.
So if I'm accepting 10 companies in a cohort year, I'm going to look at 1 or 2 who are early stage, but when I say early stage, they still have an MVP. They've started to figure out problem solution fit, but it's time to really figure out product market fit. And I'm investing in them because it's a perfect founding team, essentially. And I really believe in the founders, right? The vast majority of companies in the cohort are going to be post-revenue, so not profitable, but post-revenue, or they have some form of customer base. So they're well past problem solution, they're well past MVP, and they're starting to figure out their product market fit. And oftentimes they're starting to ask themselves, is the market that we're in, because we mostly invest into international companies. Of the 27 companies we've accelerated in the last 3 years of the FinTech program, only 3 were headquartered here in Australia. You've got Pencil Pay, Carta, which used to be Plastique.
Yeah.
And then Certified By, which is an upcoming RegTech company that just won second at the RegTech Pitch Awards, actually coming after
Awesome.
Frankie won, which was really cool for them.
Yeah. Wow.
So
we had Dave and Claire from Carter on the show just a few weeks ago.
yeah, they're great. So
Yeah.
we do look in Australia, but what we're really looking for is where we work best is companies that have really have a global focus and outreach, and they see themselves as going global in the next, a couple of years. So the majority of our investments are global companies who are also looking at Australia and considering other markets as well. And then we'll hold 1 or 2 slots for a scale up. So $10 million plus valuations, $1 million in revenue, properly starting to scale up as a business.
Yeah.
And it's usually a company that is very specifically targeted Australia, and we end up being a soft landing pad for them.
Right.
What we then work with our companies is all of our programs are focused on three key kind of categories, but the program is customized to each individual company because we never want to take someone away from business as usual. So you've got, we focus on pitch readiness, commercial readiness, and investment readiness. We start with pitch readiness because it allows us to go through the entire kind of lean canvas, 0 to 1 mentality with the startups. No matter where you are, it's always good to go back to basics. We start with business model canvases. We have a specific way. I teach this pitch readiness course that's very simple. That's basically, it's not about building a perfect pitch because you're never going to have a perfect pitch. If you're pitching to 3,000 people at Money 2020 or 3 investors who are looking at investing in you, both of those pitches might be of equal importance, but the pitch is extremely different depending on your audience and what you're doing. So instead, we try and focus on how do we build your pitch into a repeatable and scalable model, just like the rest of your businesses. Because if you can't tell your story, then nothing else matters. Then we go through and we pull open everything on your commercial side. How have you done your pricing? How have you checked your markets? What's your competitor analysis looks like? How do you fit? Have you done your customer interviews? When's the last time you did customer interviews? Sometimes asking the tough questions. And then the investment readiness. And investment readiness runs through the whole program. Everything we do ties to investment readiness and helping to ensure that your data room's all set up, that you've got your 3-way financial modeling, that you have your TAM, SAM, SOM put together and it's all vetted. And so that by the time you end the program, even if you're not looking for investment right now, you've got a data room that's in a really strong place and position. The important thing is that it sounds like a lot. We're working with the companies on wherever they are. So for us, there's we have an online program that you can go through on your own time. There's weekly deliverables just so that we're all kind of staying on track. But the majority of the program happens we do one-on-ones with all the startups. And we're working with the teams really specifically to help accomplish the goals that they need to. Yeah. So, because we were talking about the 3 Aussie companies earlier, a company like Carta might be in a different place than a company like Certified Buy. And so with Dave and Claire, since they were on, I might say to them, you know what? Don't focus so much on this, on this program dynamic right now. The more important thing is for you to go close that big strategic deal. How can we help support you with that? Do you want to come, who's the mentors that we can bring you in to do, whether it's practice pitches or bounce stuff off of people who used to work at that company, for example? Can we, double check on pricing? Can I be an intermediary and as a safe person go to that company before you've actually walked in and test, and see what they might be expecting to make sure you're on the same page. There's a lot of different things that we can do. And I think the key is you kind of get that additional executive support during a program. So to go back to your original question, it's a fantastic way to really have somebody, it depends on what you want to do, but I think there's 3 reasons you should really look at an accelerator. If you've been struggling with the business to get it off the ground, if you've been really stuck in a problem solution fit or a product market fit, and you want some experts to help rip open everything and see is everything in the right place. If you're a business that's just starting to scale for the first time and maybe you haven't been a founder before, or you've been a founder before, but it hasn't gone to this level before. We had a company last year that was a scale up company that had really consistent revenue for years of over $1 million, but they just couldn't get it above that. And so we really worked with them on rebuilding that model so that they could really effectively change their business from a kind of bespoke technology service to a real SaaS-based API called business. If you're starting to scale and you're feeling lost or stuck or like you need some help, or if you really want to, the number one thing an accelerator does is it expands your network. We've got 250 people in our fintech ecosystem from all over Australia and globally. And at different points during the program, you will beat them, and they will decide if they want to work with you. So I think those are the three kind of key areas that if you're looking at, the accelerators can be a really great way to focus on it.
Now, one of the kind of recurring things that I hear when we talk to investors, whether it's VC, seed investors, is that they always talk about, and I am a little skeptical of this, that they focus only on the talent of the person and invest in the talent. By the sounds of it, it seems like you've got a few other kind of contributing factors. you kind of need to see people demonstrating rather than just raw talent. Is that kind of a fair assessment?
So I will be honest. We always say and it's very true, the number one thing we look for is the founding team. It doesn't matter the size of the business. If the founding team isn't really, really strong, you're dealing with a business model. I think people sometimes forget in technology and whether it's fintech or sports or energy or whatever, less than 1% of all startups are truly building something new technologically speaking. What most companies are doing are creating a unique business model that nobody else has seen. And so because you're building a unique business model, you need to know that the founders are really strong and adaptable, that they can pivot, that they can work through a variety of different problems and challenges that get thrown at them. So it is founder first. I think the difference, what we have started realizing, and especially from last year, is we're no longer a program that would accept anybody in the fintech space. Sustainable finance is still very broad. There's a huge amount of opportunity that we could focus on, but it's no longer an anybody or the best talent. We've realized that there's a specific area that we want to focus on. But yeah, we do. Founders first is one of the sayings you hear a lot at SBC.
Point that you raised there around the small percentage building truly unique kind of business models. I think that's one of the reasons why people experience a talent shortage, is that nobody's done it before, right? And yet the kind of recruitment process is based around demonstrate where you've done this before. So it gives me comfort to hire you.
Yeah.
What are those you touched on just kind of some of the qualities, but what are the things that you look for in those founders that give you reassurance that, hey, I think this person's got something about them that I can see them being a pioneer?
This is where I'm afraid I might fall into some Silicon Valley rhetoric. And I'm sorry, everybody. I left Silicon Valley to move to Australia. But it really is...
Man, that was going to be my next segue, dude.
Look, one of the cardinal rules that I tell any founder that I'm working with is if you're not passionate about what you're doing, I can't be passionate about it, and nobody around you can be passionate about it. And I know it sounds silly, but I don't care what you're doing in the fintech space. I don't care if you're doing the most microscopic compliance check at a commercial investment level for a major bank, and it's one tick along the strata, but it could save the bank $80 million over the year. And I don't care if you are, a company like one of our portfolio companies called Green Growth that's building bespoke investment portfolios to negate people's carbon footprint. I don't care what you do, as long as you care about what you do. Yeah. That has to come out. Then you get into the questions of have you done this before? Have you been a founder before? Do you have the connections in the network? Those aren't as hard of yes or no questions. If you could have been working in this business for a really long time, but you could have been approaching it from a commercial kind of large institutional level. And so approaching it from a fintech perspective can be very different. So that could be a plus or a minus depending on how you're looking at it. But those are still the important things you want to understand. And then how flexible of a human being are you? I think to be a good founder, what I've seen, and so we haven't really talked about this, but so I mentioned I've last year was my 10th accelerator. I've worked with about 400 startups now through accelerator programs, give or take. And to be a really good founder, what I've seen consistently, the ones who go off to do great things, who build amazing businesses, who sell their businesses, at exactly the price point they wanted to, and, whatever your goal with being a founder is, it's the ones who, when problems arise, it's not a who do I blame or what went wrong. It's a how do we fix this? Yeah. And if you have that ability to pivot and just immediately recognize those shifts, you're going to do really well.
Yeah. How important is it to have a CTO as part of the founding team?
This is a good question and a hard question, Dexter. I think it is possible to build a company without a founding CTO. It is extraordinarily difficult. Or it's not extraordinary. It makes it harder. Yeah. So if you don't have a CTO, at some point you're either going to have to give up time or money or equity. And obviously,
or all three,
or all three,
all
right?
three.
I mean, really, if you don't have a founding CTO, your options are to find one, which is very hard. You know, there are the infamous stories out there of like, the most famous one from Silicon Valley is like the Instagram founders who, they both were trying to start their own businesses. They'd kind of met through some mutual friends, but they just ended up both going to the same coffee shop every day. And so they like became friends through that. And then they built Instagram, and one of them was tech and one of them was business model sales, right? That is very rare that something like that happens. So if you're willing to give up the time to go to every event that you can, to pitch to everywhere you can, to talk to your entire network, you can do that. Or you're going to have to go to a dev shop. And that's going to either cost you money, or it's going to cost you money and equity, or it's going to cost you equity. Or you're going to have to bring somebody in down the road, or hire somebody in down the road. Because maybe they're not interested in the equity, or you don't have the equity to give, whatever that is. And you're going to have to hire an individual. So are there companies out there who didn't have CTOs when they started and were still able to be successful? Yes. But there are less of those than there are the ones who had a CTO from the beginning.
Yeah, look, my experience is they tended to be more on the fin than the tech side as well.
Yes. And I know I briefly mentioned Green Growth earlier, and I want to just use them as a quick case study in this case, because I think they're a great example. And also because they're launching their crowdfunding campaign literally this week. So they're a UK-based company. They have plans to come to Australia, but for right now, they're based in the UK. So,
and ASIC, if you're watching this, I am not a finfluencer.
Come back to that.
I'm gonna be saying this about 10 times every podcast.
The reason I bring them up is so they were one of those companies that I fell in love with before I'd even met them. I looked them up online. They hit, I mentioned what they do earlier. They ask you some questions. They figure out what your carbon footprint is, and they build you a portfolio to make yourself carbon negative. They were really early. They had an MVP, but the three individual founders had come together. They didn't know each other before the business. They came together because Chris, who's the CEO, has this really strong passion. And the other two gravitated towards his passion and his shared dream. So Chris comes from a sustainability background. He understands sustainability at a really deep level. Mark, who's their CIO, is a world-renowned family office fund manager. He works with and has worked with some of the biggest high net worths globally and their family offices, and directly managed and run, not just worked in, but was the managing director of these family offices. Really understands the fund management game at a very deep level. and Chris, Mark, and Luke. Luke is their CTO, and Luke has built fintechs before. He is a technology based founder who's built fintechs before. That's your dream team right there. You've got all three of the kind of hacker, hustler, hipster sides that you want. That's fantastic. Most companies don't have that. And you might have a really strong financial background, and you might be a financial developer, but that's different from being able to build a SaaS platform. If you're building a SaaS platform, that's different from being able to build a payments rail platform. If you're building a payments rail platform or whatever that is.
Awesome. Now, you talked before about your time at Silicon Valley. What brought you to Australia?
This is going to be a dangerous comment, but I'm just going to say it. I always tell people that I like Australia. I love Melbourne. So I did move to Australia to be in Melbourne. I think it's a really special place. And I started doing business in Australia in 2011. Sydney siders, Brisbane people, don't come at me. Just so, my story.
Sorry to interject, but I actually originally lived in Melbourne when I first moved to Australia in 2004, and was there for a year, and then moved to Sydney. And I'd always get asked the question, which is the best? Which is the best? And I can't understand this Sydney-Melbourne rivalry.
I also think they're just so... sorry, Dexter, finish your thought.
And my wife came up with the perfect response. And she said, if you could pick up Melbourne and put it where Sydney is, you'd have the best city in the world, hands down, right?
Yeah.
Like, there'd be no competition.
I think they're different. So I started doing business in Australia in 2011, and I started coming to visit Australia personally in 2015. And I started working in Fintech in 2014. So when I was here, I was working with, I did a lot of work with MasterCard globally, and here in Australia, did a lot of work with IBM, helped IBM launch Hyperledger back in the day. Did a lot of work with, my first innovation program was with UBS, and we did a global innovation program with them literally all around the globe, including in Australia. We're working with the Australian offices. So I started working, and I love Silicon Valley. I am from California. I did not intend to go into tech. That was accidental. I think like a lot of people I know in technology, I didn't intend to go into technology, but I fell into it, and I fell into it in kind of my early 20s. And I started in the mobile app space, and now we would call it startups, but back then you were an app developer. You weren't a founder, you were an app developer. And I got really into the mobile app space and mobile gaming space. And I realized, Ran at the time was one of the most kind of prestigious mobile app marketing agencies in the world. And I was employee number one, which was a lot of fun. So I got to see this growth, and a lot of our work was working with founders to startup app developers to help them build a business model behind what they'd actually built. And it took me until years later to realize that I was essentially running like mini focused accelerator programs with these companies. But I kept getting Australian clients, and because of that, I started learning something really interesting about Australia. The cost per acquisition was lower. The demographic was almost exactly the same as Western Europe and the US, and the stickiness was higher. So we started running almost all of our tests, if they were going to those markets at the beginning, we would run an initial beta in Australia, and then we would do a worldwide release. And it's something that's always stuck with me of Australia as a testing market. And then I realized I could do the opposite as well. Companies who wanted to go east, we could use Australia and really focus in on diaspora groups or demographic groups. And we didn't have to naturalize, or we didn't have to change any of the language or change anything about the app. We could learn a lot about the user behavior and then go and launch that into another market. So that kind of global market play was really important. Long and short of it is, did my 10 years in Silicon Valley, loved it. Loved San Francisco. I've lived in every part of that city. I moved there a month after my 18th birthday. But I've also lived in Barcelona. I've lived in Amsterdam. I've lived in Hong Kong. And I wanted something different I moved here when I was like 31, 32. And I knew that I wanted to move here when I was 30. And I think I realized that Australia was just had something special for me.
Yeah.
And what I've found is just, I can't speak for everybody in Australia, but I can speak for the fintech ecosystem and community, and just absolutely open arms from the moment I came in. Just anybody that, if you want to talk to somebody, you can get a hold of them. Everybody's super comfortable. You grab a coffee, you grab a beer. People are open to connecting and just talking to you and just saying, and literally for the first 4 to 6 months, I would just go and people to be like, I want to ask you really dumb questions about, because I've always worked globally with finance. When I started, I didn't know anything about APRA and ASIC and the ACCC or what their differences were. And so I would just ask the dumbest questions of people, and everyone was so kind and opening. And that really cemented in my mind that I wanted to be here for a long time.
Yeah. What's your kind of take when you mentioned there you've worked in many different countries? What's your take as to where Australia is now, and if from a fintech perspective globally?
I think context is everything. So when one of my first trips to Australia in 2014, I was asked by another organization to do a focus group. It wasn't my focus group, I want to be clear. It was a bunch of the richest people in Australia that a organization had brought together to ask them questions about what they would invest in and what their investment risk what their investment risk ability was. How risky were they willing to bet? And
what was it, mining in property?
And we're getting to that. And I was brought in for a quick 15 minutes right before lunch to talk about startups and early stage startup investment. I wasn't fully fintech then, so I did bring up fintech, but it was just startup investments broadly. And they'd been given a rundown earlier in the day, and so my job was to come in and facilitate the conversation. And it was crickets, man. I've never played to a room that tough before. And it was lunch right after, and they'd said that I could stay for lunch, so I stuck around. And one guy pulled me aside and said, "You realize the real problem, right?" And I said, "No." He's like, "You have a country that's wealth was built on property and mining." And you're talking about, at the time, you could take, so if a minimum check size, which is what we were talking about in the room, was $150,000 from an angel investment perspective for people of this stature, he's like, I can take that to Western Australia and I can get 10x off of that in 6 months.
Yeah.
Put your minds back to 2014. Remember that mining boom. And that was a click moment, right? So I knew and then from the work with my clients and other companies I work with in Australia, I knew that Australia was not, the risk adversity was an issue, and the tall poppy syndrome was an issue. That is not the case now. I'm not saying we've completely broken those two things, but I'm sorry, you can't, when you've got VCs who were early investors now in Coinbase that are based here in Australia.
Yeah.
When you've got, Afterpay being one of the largest acquisitions of all time, 2 of the top 5 biggest deals in fintech in 2020 were Aussie companies, and there's only 700 fintechs. Yeah. So Judo Bank and Airwallex were 2 of the biggest fintech deals in all of 2020, and they're all here in Australia. We are in a vastly different place now. There's still room to grow. We are still trying to kind of figure our ways out when it comes to open banking and CDR and the payment rail system. And we're ahead of I think we're ahead in certain areas. I think we're behind in other areas. But I do think that Australia, I wouldn't be here if I didn't think that Australia was becoming a central nexus in a decentralized fintech ecosystem globally. And I don't just mean that in Web3 crypto speak. I mean that in the sense of what COVID really did is one of the things it did is it removed the importance of location to fintechs, where a fintech in London had to only be focused on the UK and maybe parts of Europe, and a fintech in Sao Paulo needed to just focus on Brazil, and a fintech in the US needed to just focus on New York. And because you could get on a Zoom call with anybody anywhere while we were all in lockdown, it decentralized what was possible, and you start getting these really interesting deals of these global investments that are happening all over. So all of this to say, then what started happening in 2021 is there was kind of a re-centralization of in 2020, if you were getting funding, your funding was coming from everywhere you could get it from. In 2021, we started seeing it re-centralizing, and the big angel groups, the big VCs started saying, no, we're going to be investing in the region. We're going to be focused on these different things. But Australia has become one of the central points. And I can prove that by stating that in a couple of different ways. One, we are consistently getting fintechs coming to us, asking to join our programs to come into Australia, because they see there are opportunities here around superannuation, around property, around what I believe, sustainable finance, sustainable fintech is going to be, that are very different and unique than anywhere else in the world. The other thing is I can say for a fact that there are major VCs around the globe, and especially in the US and especially in New York, who are watching Australia like a hawk. And they are looking to invest into, because they're seeing all these big opportunities. And a lot of them didn't see, an Afterpay or a Judo coming, or even an Airwallex. And they want a piece of that. So I'm a big believer. Look, I sit on the board of Fintech Australia. I run a fintech program here. I'm a big believer in why Australia and why Australia for fintech. There's always more we can do. And that's what we're going to keep doing as an ecosystem. But we've come a long way. I'm pretty amazed and proud of this ecosystem, even since I came here in 2018, 2019. Yeah. So I'm proud of us, but we got a lot more to do.
Yeah. Awesome. Well, Brian, it's been great to have you on the show. If people want to find out more, where's the best place for them to go?
So two best ways. If you want to know more about the fund, so we are raising, like we said, it's a $5 million fund. And we'll close that on May 31st. Sophisticated investors only, but we've kept the investment intentionally low. So if you've been looking to get a diversified portfolio, minimum investment is $25,000. You can find that at startupbootcamp.com.au, and it's the first link you'll see it as soon as you enter the site. If you want to get in touch with me, best way is LinkedIn. I am Life of a Brian on LinkedIn, and you can chat with me there.
Fintech Chatter TV, presented by Tier 1 People, leaders in fintech executive search.